Hello and welcome everybody to this week's Middle Class Investor. This is Seth Martin, your host. Looking at the S&P 500. And before I take away these studies, I just want to point out, the divergence that we saw several weeks ago, and we pointed out, and sure enough, that has created some downside movement in the S&P 500, which we are looking at. I'm going to go ahead and take those studies off so that we can see the price action a little bit easier. And as you will notice, let me take that off. Sorry, I'm just trying to get positioned correctly here. So as you'll notice, we had a down week, but then we recovered quite a bit of it, and still got this target on here. It could be that this is gonna this next week is gonna continue to rise and really give us this target area. And I'll show you something on the Dow Jones in a minute that could give some visibility to that. But anyway, this we dropped pretty substantially, which is another reason I'm thinking this could be. Because if you look at this looks like this could be one, and then A, B, C. Of course, if you zoom in on it on a tighter scale, there's an ABC here too, although albeit shallow. But this looks more legit to me. So, and also it makes a lot of sense that you could have 1, 2, 3, 4, 5.5 weeks down and 4 weeks up. So we may not finish the week up, but I think we'll have some. It looks to me like we'll have some sort of rally back into this area here around 2,800, maybe just below 2,800, maybe around 2,760 or so. So maybe 20, 30 points higher from where we are right now on the S&P 500. All right, let's look at the VIX. The VIX is kind of weird. It is up, but it doesn't look like the opposite of the S&P 500 candle. So, but we did have an up week on the VIX, which does confirm kind of what we're seeing on the S&P 500. All right, let's look at yields. Let's look at the 10-year yield first. It looks like the 10-year yield's maybe pulling back here a little bit this last week, and might start the week off pulling back a little lower, or it could pull back, all the way back into here, but maybe not next week, but over the next couple of weeks. Yields are definitely on the rise. But nothing goes straight up or straight down, so you're going to have some pullback, some backing and filling, and that's just the way markets work. That's why sometimes they're hard to read. It's hard to know. It's hard to really know, was this the pullback? Is the pullback complete? Is there more to come? And that's why looking at some of the market internals is helpful. Take that log scale off. So here you can see the this is the 13-week Treasury, so this is the very short-term Treasury, and you can see we're still above this line here. We've had this line on for a long time now, and we're still above the line. It doesn't mean we couldn't, break the line momentarily in some sort of pullback and then rally. I suspect when we really know these are getting going, is we're going to see, even if it does pull back and do something like this, we're going to see yields get back up to this line up here, I think. I think you're going to see them accelerate really rapidly at some point. And maybe this line will be resistance. Maybe that won't happen until over here, and then it'll start hitting resistance on this side. So we'll just keep an eye on it, just like we do everything else, and we'll see where it goes. All right, let's look at some of the other countries. Germany. We've talked about this channel. It's still technically holding. Technically we had a break of the channel, but it got back above it. and it's flirting with the downside. So if this really starts moving to the downside out of this channel, let me back up a little bit, out of this channel and down in here, then we know we're in some sort of wave 3. Okay, and you definitely don't, if we're in some sort of wave 3 to the downside and you're in Germany and you're investing in the DAX or equities over in Germany, it might be a good time to step aside and let the bears just have it. All right, same thing with Japan. If this really breaks out and starts going to the downside, maybe step aside. And same thing with the UK. The UK is flirting with the bottom of this line. Normally, when you get a pullback in the market, it stays kind of in sort of a channel. And if we have a breakout of the channel, that usually means that it's not a pullback. It's actually something more substantial than that. Incidentally, let's just go back. I don't know if we can apply that. See, we really can't apply that to the S&P because there's not enough data here. But we could change the time frame. Let's change to like a 60-minute chart. Maybe that's too much. Let's try. I really don't have anything else. Let's just try a 2-year chart. Yeah. See, I guess if this were, let's just suppose this were a pullback, you might see this low and this high making the channel, for example. I mean, there's no right or wrong way to draw these things. It's just, what do you see? And in fact, if you can't see it, then it's hard to trade it. But you can see a situation where we broke. If this were the channel, we broke through the channel, we came back, retested it, and fell through. Now we're back up in it. But we're back up in it in something that looks, again, corrected, right? So if you draw a line here, draw a line here, we might see this get back up here just to barely new highs, maybe around, what is that? That's 28.20 or so, and then turn around and continue selling off. Let me delete these. I don't want these on there long term. So that's kind of the principle around channel and pullback, and how do you know the pullback's over or it's not a pullback now? That's kind of how you would do it. All right, let's go back to the 5-year chart, which is a weekly chart, and let's just take a look at and what I want to look at here. I guess that's really it on profit charts. Let's switch over to the TOS charts, and we got gold here. And gold, we talked about this likely being, some sort of consolidation, and I think it was here. We got some sort of, bottoming pattern where you got a low, a higher set of lows, a new high, and a higher low here, really just pulling back to this consolidation pattern, and more than likely breaking out from here. And so so where might gold go? I mean, that's really the big question. And I think maybe this is a little too high. Maybe this gap, there's a gap back here around 1490. Maybe we go to the gap. Maybe we go a little higher up to 1550. But certainly this is very overlapish too, and I wouldn't say that gold is in a new bear market just yet. Now there will be a time for gold to be in a bull market, but I just don't think it's right now. All right, let's look at the euro. I'm going to show you some charts here in a second from Elliott Wave. They're saying that the euro is likely done going down. That this is we're going to start a wave 3 up, which means the dollar is going to go down, the euro is going to go up. So we'll see. I think at this point it's still like catching a falling knife. I think you need a little bit more evidence, but it is at support, larger time frame support, and you've got to respect that for sure. All right, let's look at the British pound US dollar. Same kind of thing. It's at support but support could end up being down here as this sells off and maybe goes lower. We'll see what happens. Oil, oil's been dismal the last several weeks. Whoops. You can just see here how it's sold just straight off without any kind of upward chop or movement to the upside. And that's and when we do get a movement to the upside, it'll probably be pretty violent and probably be some sort of B. So we're expecting these to be 3-wave moves inside of this triangle. So ABC, 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 and so on and so forth. So if we do see 5 waves pop up in there somewhere, we will mention it here on this program. All right, let me switch over to the Elliott wave stuff because I want to show you their charting. Now this is an hourly chart, so it's very, very short term. But we basically got the November 8th high here, and we've counted 5 waves down, and you can see this is a shorter pullback. So let's go back and let's figure out where this is in context. Let me get off the week and go to hourly. So first of all, I want to point out that we see 5 waves here. You can see 1, 2, 3, 4, 5. Okay, let's just draw it real quick. So 1 down here, 2 back up. Get my mouse to cooperate. Golly. There we go. 2 back up, 3 down, 4 up, and I'm having a hard time getting this to work. Okay, there. 5 down. Okay, so we've kind of traced back to the 4th wave high, although normally we would go beyond this a little bit. So this leads me to believe that this is probably A of an ABC. It's possible it's not. It's possible that this is the pullback. This is all we're going to get, and this is the next wave down, but of lesser degree, and we've got some sort of ABC pullback into here. So let's just mark that so we can kind of remember what our analysis was. Let's kind of come off of this this high here at 27.58, which I was saying earlier, 27.60. Also, you've got a 4th wave low of this wave 3, so that's another good place for the market to stop. So maybe we gap down in the morning, the market rallies back up, spends all day rallying back up, and then that becomes it. And so this was a 1, 2, and then a 1, 2, and then goodbye. So I don't know. I just know that there's a lot of risk to the downside here. We could easily have a situation where 3 or 4 degrees of trend unfold to the downside, and before you even get to even say anything or hope for a bounce, we're going to be down substantially. So be aware of that. Just to have a plan. Just make sure you know what you want to do when and if that does happen. Okay. All right. Let's go back over to Elliott Wave and scroll down a little further. Here's the Dow Jones bigger picture. Here's the NASDAQ. The NASDAQ's kind of putting out clearer waves. There's maybe saying 2 is over, and then you got this next wave 1 down, and you've got another 2 that's forming. And so maybe the NASDAQ is a good one to watch just to kind of see where we're at. Here's 30-year bonds, clearly 5-way moves. So what happens after a 5-way move? Well, you get a move down to this area, right in here, and then a rally, and then a bigger sell-off that retraces this whole move, which comes down to here, 29.17. So 2.917. So we've got a lot of things coming together here to show some significant risk in the market. Again, the euro, they're saying that this is probably complete into here. and the euro will be rallying back this way pretty rapidly. And setting up, so just so we're clear on this, if this is one up, see there's 1, 2, 3, 4, 5. They're saying that's a C. So A, B, C. So we're looking for 2 up here for 3 to go down. So that's, it could have already begun, or we could see this go a little higher and then start. So just beware of the dollar. Be watching the dollar. Excuse me, very carefully, because a rise in the dollar could be in conjunction with a fall in the euro. All right, that's gold. Silver, you can see here silver. They're showing 5 ways complete on silver, and so we've got silver starting to move out. All right, everybody, that is really it for this week. I want to caution you, the markets are getting very volatile. One of the things you'll notice is you're starting to see, in fact, let's just look at it real quick before we end the day. Let me go to 20-day chart, just for grins. Okay. No, let's not do that. Let me just put it back on a daily. So one of the things that's happening is you'll see the market be up during the day a lot. Like you're starting to see the market will be up during the day. Like right here, it's up and it's sold off, and the next day it really sold off. There's several days where the market's gapping up and then finishing the day lower. And this is a topping sign. This is a topping formation kind of situation. So be very, very careful about putting new money into this market and trying to call this a bounce. It could be the falling knife that you just keep trying to catch until you bottom out. I don't know, 50-60% lower than where we are today. So be very careful. I just want to caution you. And I know I've been giving caution a long time, but part of the reason this is taking so long to unfold is because the degree of trend is so large. And I think that's going to prove to be very, very damaging for people that are, well, I just put it in and forget about it kind of people. I think that's going to be, they're going to see themselves, their savings and everything get wiped out, which is unfortunate, but that's the risk of lack of knowledge and lack of interest in gaining any knowledge. So everybody be careful. Share the video with your friends and family. Let's get the community larger here. Let's get this. Let's help people keep their money and keep their retirement intact. I don't want to see people, really getting into a bad way because, they're too close to retirement and they've lost all their money. So let's protect our friends and family and keep that from happening. Okay. All right, everybody. Thanks for coming in this week. We'll talk to you next week. Bye-bye.